a very strong performance that came through, and we saw plastics doing far better than the paper business.
Yes, it must be noted that the plastics is coming off a substantially lower base than the paper business. The paper business has been our mainstay for several years. The plastics business we brought into our fold in 2007. It's been a story of optimization and recovery, and we are very pleased with the progress we've made there. So all in all, a very pleasing result there.
When you see what we, from the revenue makeup front, we know that the paper business makes up 73% of revenue. So give us an indication of the revenue mix going forward and whether you're planning to diversify this further.
Well, so paper makes up 76 and plastics is 24. And to be quite honest, we'd be happy if it remained like that and both businesses were growing very well. Yeah. The reality is, though, that in South Africa, the prospects for rigid plastic packaging are certainly a lot more optimistic than they are for the paper packaging. And that's driven to some extent by the migration from other substrates, packaging substrates, into plastic due to economics at the end of the day, and also various other benefits.
And we know that imports are actually one of the biggest issues that you've actually experienced over the period, and obviously a much stronger local currency making it quite attractive for those to import.
Certainly the first half of last year was challenging from that point of view, so we were faced with quite extensive import competition due to both international paper prices and also the rand strength. We wouldn't like to pin all our hopes one way or the other in terms of the rand. We believe it is necessary for us to make sure our business is competitive under all circumstances, and we are doing a lot of things to make sure that is the case.
Well, you haven't even been listed for a year yet, because you listed July last year, essentially.
That's correct.
You do cite a tough trading environment out there, and of course when it comes to the packaging business, perhaps very much linked to the overall economic growth outlook. What kind of numbers are you then pricing in for this year, because we're still expecting economic growth to hit around 3%?
Yeah, certainly packaging you would expect in the long run does track economic growth and GDP growth. There are anomalies in the intervening periods. For example, when you do have a period of strong exchange rates, you'll find that it wouldn't necessarily track GDP as people are importing goods. So in South Africa, you would have seen in the past year a lot of imported substitute raw materials, but also a number of players importing finished goods which are packaged in their home countries. So those are both factors which detract from growth relating directly to GDP. But in the long run, you would expect GDP growth to be a key measure for packaging growth in the industry.
A positive element here, your gearing is down to 36% from 96% in the prior year. Are you happy with this level now?
Yeah, I think it's important for us to be at a level where we can continue to grow and expand our business. We are a young company as we stand today. We are ambitious, of course, and so the gearing at 35%, it must be said, is comfortable, but we would take the opportunities that we see and those that we can create to grow our business down the line. So 35% is, it must be said, comfortable.
So let's look at the margin scenario that is playing out. I know that you're saying that the paper side could actually still experience a bit of margin pressure into this year. You're hoping to make that up within the plastics industry?
Well, yeah, there's no doubt that the plastics industry is also under pressure. If you look at the oil price, which drives effectively polymer prices.
I saw you watching quite intently when we looked at that Brent
exactly.
price.
So, you know, there is pressure from that point of view, but generally speaking in the plastics industry, one has just got a slight lag in terms of recovering those increased raw material prices. So there's pressure on both sides, there's no doubt, and that just requires us to concentrate on all the things that make the value good in our business, and those relate to a broad spectrum of issues.
How can you mitigate the risks when it comes to the oil price? I mean, is there any specific strategy that you embark on?
Look, I think generally speaking, oil, the increases that come through from raw materials like that are passed on to customers. The question is the lag that one experiences from the time that you experience the higher price to the time you can pass it on. So your margins do tend to contract somewhat when the raw material prices are rising, and then you do get some back as they fall.
When you look at your maiden dividend that came through, 40 cents a share, I'm sure a lot of investors are smiling at this number. Will you be able to maintain this going forward?
Well, bear in mind, Eleni, that is a dividend which relates to the whole year's performance, although it is paid as a maiden annual dividend, you could say. In future, we hope to pay a dividend twice a year. We are looking to give our shareholders growth in the business, which will then reflect in dividend growth. So that is our objective. Our dividend policy is to pay out 2 to 3 times over the cycle based on underlying earnings.
So tell us about, I know you talk about something called seasonal trends. So tell us about the seasonal trends and how you manage this from a volume perspective.
Well, you find that in industry generally, certainly in the packaging industry, a lot of packaging is done in the second half of year related to the time that fruit ripens, for example, related to packaging for the festive season and things like that. So by that very nature, the second half of the year is typically a lot better than the first half. So you have beverage companies, for example, stocking up for the summer. And so you've got summer sales, from September onwards. So all of those factors lead to a stronger second half generally than the first half.
And your customer mix?
Our customer mix is varied. In a paper business, we are the biggest supplier to the agricultural industry, specifically the fruit industry, and those are people who are growing fruit for the export market. So a very strong business built up in South Africa by many of our customers who have built strong brands overseas. So agriculture is a big factor. Of course, we supply the fast-moving consumable goods companies with packaging. And then we supply paper to a broad array of people who are converting it into other packaging products.
Bruce, a pleasure speaking with you. Thank you so much, sir, for joining us.
Thank you.